We're going to be spending some time looking at the corn crop, where we went in 2019, but more importantly, where we're going to go into 2020, looking at the next 10 months, which means, believe it or not, talking harvest. As Jeff Peterson joins us with Heartland Farm Partners, a good idea to kind of take a look at what's happening with this corn market. First, kind of where we came from. As we look, how does corn demand look?
Yeah, this time of year, Susan, it's always interesting to take a look at this, and we like to see kind of where we're at. You know, we're a little bit about halfway through the crop year. The crop year for the 19 crop started there in September, so we're moving our way along. And overall, on the demand side for the 2019 into 2020 crop, I always like to look at how does it break down. And the first thing we look at is that on the feed and residual side, that makes up about 38% of our overall demand that we have. So, you know, as we'd expect, the feed demand is extremely important. But the one that's actually continued to kind of creep up on us is the ethanol side. And ethanol is actually at about 39% of the total corn demand. But the thing I'd like to say about that is that it's a little bit deceiving, because on the ethanol side, what we have is that everything that goes into an ethanol plant actually counts as ethanol demand. So as a result of that, that means about a third of that comes back out as distiller's grain. And so that actually really needs to factor back over on the feed side. So that makes the feed even more important. Exports, you know, they're not our biggest category, but they're actually that category that makes the difference between having a good crop year and a tough crop year. They make up about 13.3% of our overall demand. And then we've got our food, seed, and residual, which is about 10%. And then our seed makes up about 0.2% of our demand. So that's overall how our demand breaks down.
I find it interesting as you look at that pie chart, the way ethanol has kind of a little bit larger demand, but really it doesn't. It's because of the DDGs and stuff moving into other options once it's made into ethanol.
It really is. You're exactly right, Susan. That's how it breaks out.
Well, where are we with this ethanol demand? Are we doing okay at this point?
You know, that's a great question. And a year ago, I was very concerned about the ethanol industry. We had a number so we were sitting here, and I remember being at the farm show up in Vermillion, South Dakota, and talking to some of our customers up there. And the concern was that the plants had ran for a number of months and they were running in the red. They weren't making any money, and many of them weren't even covering kind of the variable costs. So we fast forward to a year ahead. You know, we're better. We're covering variable in most cases, but as a result, our demand's still off. And as we look at the weekly ethanol production numbers for the year, and keep in mind that started back in September of 2019, USDA is saying that we're actually going to be unchanged on the ethanol demand, but we're down about 3.4%. And I'd say the reason that we're down the 3.4% is that the ethanol plants are having to pay more on the basis. And there for a while they had to pay last summer some higher prices. The other thing we've got those small finery exemptions, and that's taken away some of our demand. And then on top of that, probably the last item is China. And they had been a buyer of quite a bit of our ethanol in the past, but when the tariffs came in, you know, they were not there to buy our ethanol. So, you know, I'm looking forward to getting this trade deal done and actually getting them back in the ethanol market to kind of help this ethanol industry out.
Very much so. And as you talk of that ethanol and where we're seeing the demand, it's tough for somebody when they've got to decide a basis at the local elevator, which puts more coin in their pocket, versus maybe taking it to that ethanol plant who they've been loyal to this entire time since the plant went up.
That's exactly right. And we're seeing some very unconventional things happen, not only here in Nebraska, but all the way across the Corn Belt. And one thing we have to think about is that we'll take the ADM Columbus facility on the ethanol side. They're normally pulling corn out of South Dakota, but because of the large amount of prevent plant and the poor yields that we saw in parts of South Dakota, there's actually corn that's moving out of Nebraska into South Dakota. And so that's bringing our basis levels up in the northern part of Nebraska, in South Dakota, and then we get over into northwest Iowa, and what we're finding over there is that the animals, with the large amount of hogs and cattle that they have, they're continuing to have corn for their feed mills, and that's making the basis very strong up there. And then we get into the eastern Corn Belt, and actually the basis is actually really high over there because the ethanol plants need the corn. They just didn't have the crop that they normally have. So we're seeing it all the way across the nation.
Well, interesting point then. What does that mean for our feed demand right now and how it's looking?
Yeah, so as we take a look at our potential feed demand, and what's always interesting, USDA reports the information on the feed a little bit different than they do on the grain side. Grain, it's always according to a crop year. Anytime we start looking at their demand breakdowns, it's always on a calendar year. So where I like to start and explain this is let's look at the 2019 versus the 2018. And as we kind of summarize the information, what we can see is that the total red meat in poultry is at about 2.8% higher from 19 into 18, okay? Eggs were up about 2.7%, milk was up about 0.5%. But here's the challenging part to kind of think about. Overall, though, our feed demand, now let's think about this for a second. Our feed demand is going to be down about 6% on the crop year of 19 versus 18. Now, why is that? Well, prices got high enough, basis levels got high enough together that what that meant is that we actually ended up having alternative feedstuffs get priced into the rations. And one of those things that we've seen get priced into the ration would be wheat. And we don't see a lot of wheat fed here in this part of the state, but as we move into Kansas and parts of Colorado, and even as we move further south into Oklahoma, into Texas, wheat does come into those rations. And wheat got really cheap, and as a result of that, it did take away some demand from the corn side. Now, as we roll forward and we think about the 20 crop, and we'll spend more time talking about this in a little bit, the actual increase on the meat production side looks good again. It looks like from looking at the calendar year 2020 versus 2019, we could be up about 2.7%. And the eggs and milk, are actually looking good compared to where we would have been a year ago. So I'm anticipating us to see some stronger demand as we move into the 20 crop on the feed side than we had in the 19.
And it doesn't surprise me that we're seeing an increase on that broiler poultry with the growth that we're seeing here in Nebraska.
That's so neat. And what's been neat to see is just how a whole industry has popped up. And that's going to be important for individuals that happen to be in that Fremont area, sitting in there between Blair and Columbus. That's going to be really positive for their basis levels and just help give a little bit of extra boost.
We've been talking competition. You got to look beyond the borders of Nebraska and look globally. What does that mean right now for our corn market, and are we able to hold up and compete?
Well, and you're exactly right. We're dealing in a global market, and that's the thing we always have to remind ourselves of, is that back if we'd have been having this conversation 25, 30 years ago, we'd have spent most of our time talking about what was going on in the U.S., but that isn't the case. We have a very global market, and as we look on the global market side, what we've got some very important players that happen, and those important players are really Argentina and Brazil and the Ukraine, and the best way to probably look at that is to take a look at our U.S. corn exports. And on our U.S. corn exports, we go all the way back to 2002, and what we're showing is that the units on here are millions of bushels. But one year that stands out is 2012 into 13. We got all the way down to 731 million bushels of exports. And why was that? Well, the reason it was is we had high basis levels, we had a short crop, prices were extremely high. What that caused to happen is that when that happened, that caused Brazil to start increasing more corn production. We don't hear a lot of talk about that, and the trend might have even actually started back in 2010 for them, but it got prices high enough that they said, you know what, we're having problems within our country with soybean rust. We need to put in a rust-free time, which would mean right after the soybean crop, we can't have anything, and it just so happened at that time that corn prices were high enough that they could bring in the fertilizer, and as a result, they started producing more corn. And they became a big competitor and continue to be a big competitor of ours on the export side. So roll forward to 2017. We look at 2017 and our export demand was over 2.4 billion bushels. It's the highest we had actually going all the way back to 2007. And what was different about that? Well, Argentina and Brazil was having some crop problems. And when they had the crop problems, Ukraine, the production wasn't great. We were stepping in and we were filling that void. But what you notice is since 17 all the way here to 19, ultimately we've been pulling back on what our exports have been. And why is that? Well, the first big factor is that Argentina and Brazil are back to producing their normal amount of corn, plus they're producing a little extra. We're continuing to see them grow. The Ukraine is producing more corn now, so they're more competition. And as a result, sitting where we're at right now, our basis levels are higher, which is a good thing for the farmer in the U.S., but it makes it much more expensive as we go to export that crop, as you look at what the value is at the Gulf of Mexico or the Pacific Northwest. So we haven't been as competitive. And Susan, USDA, in their last numbers that came out in December, they were forecasting that demand would be down about 11.6% on the export side. Right. When we take into account where we're at on the exports and also where we are on the shipments, so the stuff we've sold and the stuff we've shipped, currently we're down about 43%.
That doesn't surprise you though, does it?
No, it really doesn't surprise me a lot, but unfortunately what that means is that if we don't see that trend change as we go forward down the road, USDA is going to have to reduce our export numbers some more. Now, I think with what we're seeing right now, I think we're going to see some better export numbers as we look at what's being offered out of Brazil. I would say that their offers are not as competitive. They're running out of some of their old crop stocks. The other thing that I think is going to help us there is the fact that their soybeans went in a little bit later than normal. And that doesn't seem like a big deal to us. But the reason it is a big deal is the fact that what that means is their safrinha crop, their second corn crop, the one that is used mostly for exports, is going to get harvested a little bit later. It's also possible that that crop, it runs into some drier conditions as it finishes its fill at the very end because it was planted later. So that could mean timing and maybe production pulls that off and makes it so that we're able to be a little bit more competitive as we get a little further down the road.
So as you look at the big picture then, how is our corn demand doing overall?
Well, as we'd expect, as we look at our total corn use, you know, we peaked out back in 2017 at about 14.8 billion bushels, just shy of that. And we actually would have seen higher if we were looking at the month-to-month numbers. Keep in mind what we're looking at is where we ended up for the year. On a month-to-month basis, there would have been periods of time in there where we would have actually been higher than what that 14.8 is, but that's been the highest year we've had when we finished. You can see that we're forecasted about 13.9 billion bushels. Our data on this particular slide goes all the way back to 2002. You know, that's going to be down about 3.9%. And really it just comes back to ethanol being off, our feed being off some, and our exports being off. So we need to go ahead, and as we produce more, we need to see that demand come back up.
So overall then, how would you describe where we're at in our current supply-demand situation for corn?
Yeah, I think the best way to look at it is if we look at our supply and demand, the slide that we've got up here, there's a lot of data on it, but the reason I brought it in and wanted to talk about it is each of the individual columns represents a particular crop year. And if we draw our attention clear to the right-hand column, which would ultimately be the one that's in a blue color, that lays out where the 2019 crop numbers are. And what we want to do is go to the very right-hand corner of the slide and we look at the ending stocks number, and I think that's the best way for us to kind of explain what's our situation. Because on the ending stock number, that's our total supply minus our total demand. And that gives us a way to be able to compare from year to year how much corn we have left over. And you can see at 1.9 billion, that's less than what we were in 2018 at about 2.114 billion. It's less than where we were at in 17 at 2.14 billion. And if we go back to the 2016 crop, we were at 2.293. So our ending stocks are trailing down. But the rest of the story on this, though, is that as we start thinking about what does this mean for prices going into 20, 1 year ago, okay, the 2018 crop would have, instead of showing 2.114 billion, would have actually showed 1.78 billion. So over the course of time, what we ended up seeing is that we saw our stocks increase. So if we want to compare apples to apples, we would say that for the 19 crop, we're currently at 1.9 billion. That compared to 1.78 a year ago. And so overall, we're not in a bad position, but what it means going forward is we're really going to have to think about what are those changes that are going to happen going forward that's going to really have an impact on price. And we're going to talk some more about that in a moment.
Something to definitely keep in mind as we look at wrap up 2019, we have to move forward to 2020. And we know that we're nowhere near planting, but it is going to be a discussion that we're going to have as we look over the next 10 months. What do you think acres are going to look like in 2020, knowing the acres that didn't get harvested in 2019 and issues there?
Well, I was really hoping you brought your crystal ball today, Susan, for us.
Sorry.
Because you're hitting on all the right points. If we were to say one big factor that's going to be the key to really where the markets are as we move into this 2020 crop year and 2020 calendar year, it's really going to be all about the acres. And if we take a look at where our U.S. planted acres, I think that's a good place for it to start. And what we're showing is corn, beans, and wheat combined. And the data goes all the way back to 1976. And a few things that kind of stand out is that if you look back there, back in the early 80s, we had, between corn, beans, and wheat, we had over 240 million acres in production. Now, we've pulled that number all the way back down to about 190 million back in 87, but that was really all because of the farm program and changes there. But if you look at really on where our acres are at ever since 1996 would have been when we went in the Freedom to Farm Act, you'll notice we haven't probably had quite the volatility in the acres that we'd have had. But one thing that you'll notice starting in 06, we have seen an uptrend in acres. That uptrend happened all the way through really 2013, and that was all driven off the fact that on the front end of that, it was all about ethanol and the fact we needed to take acres. The first questions that many people ask is that, well, we didn't grow more acres. Where did these acres come from? Well, they came out of CRP. Okay. We actually brought them out of CRP. We would have peaked out at around 37 million acres at its peak, and now we're sitting back at about 22 million acres. So there's been about 15 million acres that's got brought into production. Now, one thing you'll notice is that as we got into 13 and 14, and even compared to 10, we saw an increase in acres. And the reason we had that increase in acres in that period of time there is because we had year over years in there, if we think back, of poor crops, and the market kept giving us high prices, so we planted more. But what you'll notice is that ever since 13, really our acres have been trending down. And that's been because we've been trying to find places for all these acres that got brought into production so that we could get prices balanced back out so it makes it so it works for everybody. But the one thing, Susan, that you really notice is 2019, we saw a very big pullback.
Let's talk about that, Jeff. I mean, can we blame that pullback in the prevent plant on the horrible March, April weather?
That's exactly what it is. And as we look at that number, let's just take a look at it for a moment. 211,357,000 is where we ended up coming in at on corn, bean, and wheat acres. And if we look at what that meant for U.S. prevent plant acres, so as we switch over and look at the acres, we had 18.1 million acres of prevent plant.
Wow.
Compared to about 1.6 million acres of prevent plant the year before. And our data in here, and the data set that we're able to get from USDA goes all the way back to 2007. You can see that the numerical average is about 3.84 million. So you're exactly right, Susan. It's because of the prevent plant that pulled our acres way back. And where we're going to be going forward this year is going to be a very important point as it relates to the prevent plant and our overall acres. We're currently right now saying, well, let's go back to something slightly higher than the average. The average was a little over 3.8. Let's go to 4.1 million acres of prevent plant, but there could be more of that. And this gets back to your point you made when we started talking about this question. What about those acres that are up in South Dakota and parts of really North Dakota is probably hit worse that haven't even been harvested yet? What's going to happen to those? Now, most of those will get harvested, but it's going to take some time to go ahead and then get it harvested, get the ground back in shape, and so we think we're going to see some higher levels coming out of North Dakota. South Dakota, maybe not quite as much. So we're going to stay pretty fluid in regard to what our forecasts are for the acres going into this 20 crop year.
So what do you think the breakdown then is going to be for this 2020 corn crop?
Yeah, and so as we've sat back on that, really what's driving that decision for us is that a couple things. We're looking at where the overall prices are. We're also looking at what's happening on these trade talks. And then we're also looking at what is happening across the world in regard to production on the corn side in Brazil, Argentina, and also the Ukraine. And currently our forecast as we look at the U.S. planted acres, we're saying that we think we'll be at about 97.9 million acres of corn. That's going to compare to 89.9 million acres out of this last year. And you'll see that that's going to be one of the higher amounts of corn acres that we had planted. Over on the bean side, we're thinking that there could be about 6 million acres that could come into beans, taking us from the 76.4 million, 76.5 million, up to about 82.5 million. You'll notice on the wheat side, we just continue to see that line trending down, and we know even though corn and beans are a very global crop, wheat is an extremely global crop, and we just have too many acres in production right now. Now, I want to frame up this acre discussion a little bit, I want to put a few more parameters on it just to help us understand. So we've talked about, an 8 million acre increase on corn. We've talked about a 6 million acre increase on soybeans. But one thing we always like to look at in regard to how will the markets trade that in regard to price is we have to say, well, what would it take for an acre mix to just keep our stocks steady? Because we can understand what steady means. Well, on beans, it means we only need about 4 million acres. Okay, so if we need about 4 million. But what it means actually in corn means we need to actually get rid of about 3 million acres. So let's think about that for a minute. We need 4 million acres in beans, get rid of 3 in corn. That'd be great if we didn't have all the prevent plant.
Right.
So even though the corn market kind of feels like we've got some good footing here, basically, and I wouldn't call it a black swan, but that event that's looming down the road is going to be how big of a corn crop could we have going down the road.
So where do we see USDA then starting out when it comes to yields this early in the season?
Well, we've started to see some information, so let's just kind of walk through what are some of the things we know and what don't we know. Well, what we know is that the first actual report for the 2020 crop won't actually come out from USDA until May, okay? So, and what also do we know? We know they came out back in November with some baseline numbers, and there's an important piece of information that came out of the baseline. A lot of times we don't put a lot of credibility into the acres because it's not based off of farmer surveys, but we do like to take a look at what they're using for the yields. And what they did for the yield is that they used a 178.5 in that baseline number that came out the first part of November. Now, as we went back and studied and through our research, they don't always carry that number forward as they get into the Outlook meeting and then as they get into the first official update in May, but many times it's within a few tenths of that. So we think actually as we take a look at the U.S. corn yield, statistically, in our red line there right in the center is a trend line, it would say about 178. That's the long-term trend. We can see we've bounced below it, we've bounced above it. This last year we came in for the 19 crop at a 167. I thought it would be much lower than that, but that's where the numbers will be, and we'll get an update in January on that number, but I don't think it'll change much more than maybe a couple bushels. So we're right now going to start off the 178 yield as a number that we're comfortable using.
So how will this corn production compare to other years?
Yeah, and that's where we really start getting really the rubber meets the road, so to speak, and helping us kind of get our arms around what the prices are going to do. And as we take a look at the U.S. corn production, when we take the current forecast we have, we take what would normally be the amount of harvested acres that would come out from that, would tell us we'd have about 90 million harvested acres. And when we use a 178 yield, that's going to give us a crop over 16 billion. To put that in perspective, we haven't ever produced a crop over 16 billion bushels before. So that means, will we be able to store all of it? Yeah, there'll be enough ways to store it and tuck it away, but it's a big crop. The biggest crop that we've ever had prior to that, we'd have to go back to when we produced about 15.1 billion. So it's going to be over 900 million bushels bigger than our biggest crop.
So how does supply and demand then factor in for 2020?
Yeah, and that's where we always have to get this to, is we really have to get it to a point where we start talking about the ending stocks and probably more importantly, that stocks to use. So let's take a look at our numbers we have for the U.S. corn supply and demand. And you've seen this table just a little bit ago, but what we did is we added a possible scenario out there, the 2020 crop year, and it's on the far right-hand column, and we've put in our acre numbers, and we then adjusted it for our percent harvested and got us to about 90 million acres harvested of corn, and a 178 yield gives us over that 16 billion bushels of production. And we're saying if we carry in about 1.9 billion bushels, which looks like that so far anyway is going to be kind of where the 19 crop ends, but keep in mind that 19 crop doesn't end until August 31st of 2020. That's when that crop officially ends. But when we bring that together, that tells us we're going to have a total supply of just shy of 18 billion bushels. Okay? Then we go in and we say, well, what do we think is going to happen? So if we have 18 billion bushels, our thoughts were going to be is that's going to put some pressure on price. That's also going to go ahead and give us more abundant supply, which means from the basis side, it should relax our basis levels, which can mean we can move more corn into the feed demand, we can move more into the ethanol demand, and we can move more into the export side. And we went in and we raised between the ethanol, the feed, and the exports, we raised them about 900 million bushels. Now we might have been a little aggressive there, but we raised that 900 million, Susan, but even when we do that, that still gives us an ending stock number, total supply minus total demand, of 3.15 billion bushels.
So how do ending stocks then compare to other years?
Yeah, the 3.15 billion, we compare that back, that would be the largest that we would have had, and in order to have a good discussion about that, we want to take one more step on that, Susan, and we want to take the ending stock number, the 3152, and divide that by our total usage, which is the 14,815 million, and we want to get a stocks to use percentage. And that's on the very right-hand corner of our table at 21.3%. That 21.3% you can see much higher than what we'd have had in the 19 crop. And even when we were back where we had a higher carryout number in 16, our stocks to use percentage there was only about 15.7%. So you can see it's a much larger supply. And what that means is that's going to have an impact on prices as we go forward.
So looking at that, and as you look at the stocks and the graph that you have, we see that dip in 2013, as we've seen really this whole time we've been talking about corn, but nice to see a spike up as we get closer to 2020.
Yeah, so what we have is that on the ending stock and the chart there, the data that we have there goes back to 04, and it gives you a little bit broader view than the last graphic that I showed you. And you're exactly right, Susan. Our amount of ending stocks back coming out of the 12 crop year, and it really is getting right at the end of 13, was 821 million. And you can see on here the other highest one year we show would have been 2.293, but we're talking about 3.152 billion bushels. And the impact that that's going to have on the price longer term, that's what we really have to focus on executing our marketing plan from.
So you look at all this information that we've shared over the last half hour. How does that information and the corn price going forward?
Yeah, and I always like to answer that question. I like to go back and take a look at a weekly corn chart, and that's what we've laid up here for you. And what we've done on this weekly corn chart is we've taken a rather short period of time. We're actually only going back to October of 2014 is as far as our data goes back, and you'll notice some spikes. You've got a spike there at 438, you've got a spike at 439, and then you've got this really good spike last summer at $4.64. And those all came about because of really, if I'd sum it up, weather problems. Okay, some of those was too dry this particular year. This last summer, it was really because conditions were too wet. So as we look at all our numbers that we have right now, in the time frame we're really focusing on long term, let's say from now until harvest, I'm going to lay it out this way. If we have the 3.1 billion or around 3 billion at harvest time, we'll be looking at sub $3 corn. And then you got to take a basis off that. Now, can a lot of things happen between now and then? Most definitely they can. Will there be pricing opportunities that will happen over the next couple months? I think there is. As a matter of fact, I think we're in the midst of a pricing opportunity right now. I think the market move that we've had higher right now that's got us up just a little bit over $4 on the December 2020 corn has got us up over $3.90 on the March corn. I think these are some levels that we're going to need to sell, because without additional information coming in the market, it's going to be hard to keep moving these markets higher. Because let's think about what are some of those positive things we've fed in. We've got the talk of a trade deal being signed. But what has to happen to further fuel that rally from that? We have to physically go ahead and actually see the buying happen. And will it happen? I don't know. It all depends upon really how tight or how hard of an enforcement mechanism there is there in the phase one trade deal. From there, we also then have to think about what's the weather going to be like. Well, we don't know yet, but we know at some point in here we're going to have a lot of discussion about all the acres. And the funds are still short. They haven't got out of their short, so that's putting some pressure on the market. So I think the market's given us a pricing opportunity in there. Do I think the high is in right now where we're at? No, I don't. but I also find it hard to believe that we could get much above 410 or 415 on the Dees 20 under the conditions that we have right now, Susan.
So with China, USMCA, weather, there's a lot of factors that are going to be blended into 2020. So it's important to keep that line of communication open and speak to folks like you to make sure that they're on the right path to bring that profitability back to their operation.
There really is, and what's really important is to take the information that we've walked through right now, develop your marketing plan, and the most important part of your marketing plan that you really want to put together once you've created your break even so you know where you're at financially is focus hard on what those triggers are going to be. What's going to trigger you to make that sale, and look back on last year. See if you were able to go ahead and make the sales that you wanted to at the time, necessary times, but work on really getting that trigger in place so you can take what's in front of us here and turn it into a good opportunity in the 2020 crop year.
Thanks, Jeff.
You bet.
Jeff Peterson's been joining us from Heartland Farm Partners, and we thank you for joining us over this last half hour as we look at corn in 2019 and beyond. I'm Susan Littlefield.